Welcome back to the show, everyone. Today's market action was a stark reminder of the ongoing volatility driven by the escalating trade tensions. The S&P 500 fell by 3.46%. The Nasdaq dropped by 4.31%, and the Dow Jones Industrial Average declined by 2.5%. Bitcoin also saw a decline, down 2.96%. The back-and-forth tariff announcements and retaliations are clearly creating significant uncertainty and negatively impacting investor sentiment. Let's dive into the headlines and analyze the sector-specific reactions. The primary driver of today's market downturn is the escalating tariff with China. China confirmed it is raising U.S. import tariffs from 84% to 125%, effective soon, and threatened further countermeasures. This came after the U.S. administration clarified that China faces a 145% tariff rate, not 125%, causing U.S. markets to fall. Experts are highlighting the difficulty of predicting market direction amidst these constant changes, while analysts are emphasizing the importance of a long-term investment perspective. Investor sentiment on international trade, the continued escalation of tariffs, and the lack of clear communication from both sides are creating significant uncertainty and fear among investors. Investor sentiment on the overall market? The significant market declines reflect a pervasive risk-off sentiment and a lack of confidence in the short-term market outlook. Alphabet announced a significant discount on its business software for federal agencies, aiming to gain market share from Microsoft. This move targets the price-conscious public sector. Simultaneously, Alphabet is also implementing internal cost-cutting measures, including layoffs in various divisions. Investor sentiment on Microsoft? While Alphabet's move could pose a competitive threat, Microsoft's established position as the government's preferred enterprise software provider suggests it's unlikely to be significantly impacted in the short term. The auto sector continues to experience significant volatility. Stellantis reported a decline in first-quarter shipments, particularly in North America. Data shows a decline in U.S. vehicle exports to China, and Tesla has removed imported Model S and Model X vehicles from its Chinese website due to the retaliatory tariffs. Investors' sentiment on the automotive sector? The declining shipments, reduced exports, and the impact of tariffs on Tesla's sales in China are all contributing to a negative outlook for the automotive sector. In conclusion, the escalating trade tensions with China are the primary driver of today's market downturn, creating significant uncertainty and negatively impacting investor sentiment. The auto sector is particularly vulnerable to the effects of tariffs, while Alphabet is pursuing a strategy to gain market share in the public sector. However, long-term investors are being reminded of the importance of maintaining a long-term perspective and focusing on quality investments. We'll continue to monitor these developments closely. Join us next time for more market analysis.